Welcome back to the second half of the Future Show. Ladies and gentlemen, we're less than 60 minutes away from the cash open for stocks on Wall Street, and we're seeing a positive, U.S. futures, that is, seeing some positivity here after a big sell-side day Monday to begin the week. Ladies and gentlemen, we just had durable goods orders that are going to add to investors' enthusiasm, I would imagine. They came in a little bit better than expected. Let's bring in Scott Bauer, the CEO of Prosper Trading Academy. He's joining us here this morning to give us his thoughts on these numbers. Scott, good morning to you. I saw some of the revisions, somewhat mixed. It looks like durable goods orders month over month got revised down to 0.4% from 0.5%, but core durable goods orders got revised up last month to 1% from 0.6%, so kind of lukewarm in terms of last month's revisions, but this month's numbers coming in better than expected. Your initial thoughts?
Yeah, they're pretty hot, and that's a good sign. On to the next. We talk about this quite often, and a little bit different than the guest that you just had on, where they were focusing more on economic numbers and not the election. I think squarely here, Ben, the economic numbers that we are going to see prior to next Tuesday are somewhat irrelevant unless we see a major outlier somewhere. I think they're somewhat irrelevant, and the markets are truly focused now on the election because, now the stimulus talks, it's all but a foregone conclusion that that's off the table until after the election. So, what's going to happen next Tuesday? Again, we get unemployment. It's a huge week for markets in the rest of the world in terms of what their, feds are doing. But here, I think it's really focused on volatility in the election.
Yeah, I like that a lot, Scott, because, we saw yesterday's numbers. The housing number came in a little bit weaker than expected, which for the most part didn't really seem to be a major catalyst. The focus seemed to be on coronavirus numbers, stimulus measures, and lawmakers. Here you can see the better than expected durable goods orders numbers. But, Scott, we've been talking a lot about strength in the housing market, so I'd imagine investors want to see durable goods orders following in line or in suit with that. But, this is also, again, I like what you're saying here in terms of investors are really watching some dust settle, waiting on the election right now, and assuming these numbers don't come out way amiss, then it's not going to raise too many eyebrows or too many concerns. And then ultimately, like yesterday's number, one could argue one number does not a trend make. I mean, we've been looking at a very strong housing market. To see one data point necessarily or disappoint doesn't necessarily raise too many concerns.
No doubt about it, especially when we're so close to the election. And, we're going to get on the weekly jobless claims later in the week. Probably not going to be a big outlier. We're not getting a monthly number again before the election.
Yeah.
So like you said, we have to look at these numbers. These numbers are important. The economic health of the country is obviously very important, but not the focus right now on investors' minds.
All right, let's talk rates, financial markets. Let's tie it back into that discussion real quick. I mean, one could argue that rates to the upside have been, what's putting a little bit of a damper on that housing market. And if they continue higher, would we expect to see those numbers and that enthusiasm and those trends that we have been seeing, that really robust market, start to kind of diminish or start to lose some of its luster, Scott?
It may, Ben, but even though rates have ticked up and we're at the higher end of the range, with the 10-year trading 80 basis points or, somewhere thereabouts, until we really break out of that range, I don't know that we're going to see a big change to the housing market. Could there be some pressure? Could there be some headwinds coming in? Yes, absolutely. But really, until we break out of that range, and we are at the top end of that range, the housing numbers probably stay pretty robust.
Yeah, I guess one could argue we're looking at the S&Ps, which have been very much range-bound, up above 3,200 basically since the end of July. Here you can see the TNX, which has been range-bound, going on a little bit longer than that, really. It looks like since back in the beginning of March, they've been holding below 1%. Scott, I guess I wanted to get your thoughts in terms of what this all means for the U.S. dollars. The dust settles. It seems like it's kind of reflecting some of that sentiment that you were just expressing. Markets, traders, investors are kind of waiting and watching, and, for the most part, it's been hovering right around 93. A little bit of weakness here recently, but it just doesn't seem to want to tip one way or the other at this point, maybe also waiting for election results.
I think that's very true, Ben. The range that we talk about, whether it's with the U.S. dollar, whether it's about rates, whether it's about, crude, the range is very important to watch. And we have not breached the range in the dollar really for months on end here. A couple weeks ago, the dollar was very strong, got to the upper end of that range as it reached above 94 or so, but didn't break out. And now we're settled, around that 93 number, kind of the center of that range, maybe the lower end here. So again, from a technical analysis here, when you're looking at a chart like this here, until we breach the lower end, the upper end of those ranges there, it's really difficult to really portend, to predict how that's going to affect the overall market.
I like that. Ladies and gentlemen, Scott's talking about this range that we're in right here, 95 down to 91. Scott, as I look at this, I realize we're kind of in a larger degree picture range as well, from 104 down to 88. So should we break that range, as you were just talking about, this looks as something to watch in terms of directional conviction. And clearly you can see the trend off the 104 level. So a lower breach of this range that we're in right now would be in the direction of trend. Scott, do you think a potential catalyst for the dollar in this range that we've been in a breakout could be this week, central bank activity, or do you think, again, even that, aside from the election, it has to be discounted? Certainly we're expecting them to see express this kind of wait-and-see type mode, not a lot expected from them.
Exactly. I mean, they're not going to ruffle any feathers. They're not going to, come out and tip their hands or tip the market, quite frankly, with 6 days, 7 days going to the election. Okay. So the news is going to be fast and furious this week from all over the world. But, in terms of rates here, there's nothing they're going to say except more wait and see.
All right. News is fast and furious, but rates seem slow and, snailish in many ways. Yes. Scott, really appreciate you joining us here, and a great breakdown, talking financial markets, a look at the durable goods orders and some strength we're seeing there. We'll continue to watch markets digest this information. Scott Bauer, ladies and gentlemen, is the CEO of Prosper Trading Academy, and we've been talking a lot about the fundamentals.